Hello people, right, Sunday morning, and I wanted to try and sort of get back to basics, because I know if you open up my charts and you see all these squiggly lines and indicators and things, you probably think, oh my god, you know, what the hell is this? But really and truthfully, all we are trading is trends. That is the whole ethos of what I do. It has been. I was shown this 15 years ago, and quite frankly, although I've tried everything under the sun to see if there was sort of a holy grail, as it were, excuse me, I always come back to what I very learnt right back then, when I was a total novice at this. And if you look online and try and find out what is a trend, people will tell you, in terms of charts, candlesticks and whatnot, you'll get all sorts of different ideas. But one of the most important things that happened, or I took on board, when I was doing a supply and demand, a course, webinar, seminar, whatever you want to call it, again, even those can be misinterpreted and interpreted in so many ways, not necessarily wrong. Nothing's wrong or right. It's just how you believe it. And people tell you that a supply area is like up here or whatever, and you've got supply coming into the market, and hence the price will drop. And people will tell you demand is down here, and when the price comes down to this area again, buyers will come into the market. There is demand. But in reality, what does that actually mean? When price changes direction, it does it for a reason. Now, I believe that the markets are absolutely, totally, 100% manipulated. The big money, little guys like us retail traders, and even small trading prop shops and so on and so forth, that might trade in millions, don't move the markets at all. It is just the big institutions like the ECB and the Bank of England and the Swiss outfit and the Japanese outfit, when they decide to move the price. But and they do say, I've heard this somewhere, that it takes something like $50 million or pounds or whatever to move the euro 1 pip. So whether that's his say or not, just don't hate me for thinking like that. It's just what I've read. So but when you say supply is up here and the price drops, really there are, because of the fractal nature of the market, and because I truly believe this with probably 50,000 hours of chart time, that the 1 minute, you couldn't tell me whether this was a 1 minute chart, a 5 minute chart, a daily chart, or whatever, the price moves in exactly the same way. And that is because of supply and demand. Not support and resistance. The two things to me are the same. But if you think about the supply running out, as it were, and the demand coming in, if gold is at $2,000 an ounce and there is no one prepared to sell it at that because they think it's a brilliant price, then people will keep buying it at that price because that is fair value. So if this was gold at 2,000 and we come up and find the buyers start to test to see whether that is a fair price for gold, if they think it is, then they will keep buying, and the sellers will not sell. There will be no supply in the market. So supply and demand, this is a supply and demand area. It's both in one, not just up here and not just down here. And if this area becomes overwhelmed by the buyers, resistance becomes support, or supply becomes demand. So the true definition of a trend should be you low, high, higher, low, higher, high. Old supply becomes new demand. And that's why it's so important when you're mapping out your trends, you know, a low, a higher low, a higher high, and old supply becomes demand. Old resistance becomes support. So when you do your trend analysis, you must always have this sort of area, a range as it were, which is swing 4, which is the accumulation phase and the distribution phase, depending on which way you're going. You must have one of those battlegrounds, as it were, to bust through, so that you clearly know it has been tested until it finally fails, or fails here, fails to go up, because there is no demand at this stage. Supply has overwhelmed demand. So that's, if you think of that, it may help you in your understanding of which way the price is going, instead of just saying support and resistance and the 4 phases or the 5 phases of a trend. Because it could be 5 phases, it could go up faster, it could be just 3 phases, or it could stumble before it gets here and have five phases, and the breakout is the 6th. So how can we make this, how can we simplify this? Well, we're on an hourly chart, so if we go down to or up to a 4-hourly chart, we can look at the candles in their own right. And that's how I simplify it, because I now only have a few levels to worry about. So I can put high on that, and I picked this randomly, this one, so I haven't got a clue how this will pan out. I can put a high on the what I call the penultimate candle. High, low, lower high, lower low. And then we've got the 4 swings, with the 5th swing being the breakout on this side. Swing 1, then the pullback, swing 2, then the breakout, as it were, test of old supply becoming new demand, then the pullback, and then the breakout. So swing 1, swing 2, swing 3, swing 4, swing 5 is the breakout of this high here. And this, the fact that we've closed through an old supply area, meant there is no supply left. And that's it. How much easier is it just to look at 3 or 4 candles than try and work out where your supply and demand is? And that's as simple as that, guys. Look, we've got one here. Swing 1, swing 2, swing 3. Swing 4 is the pullback, and we've failed to make swing 5. And then, because we've failed to make a higher high, we can start to sing the song in the opposite direction. High, low, lower high, lower low. Old demand, which pushed the price up, became new supply because there was no more demand in the market. We even had a little pullback to test it, and that is what I talk about all the time. Tests and retests. How do we know that this is fair value, gold at this imaginary price? I know we're on cable, but gold is easier for me to visualize, unless it comes back and tests to see whether there is any more supply or demand there. Simple. And you know, here's one here, low, high. We treat the engulfing bar as the reversal, or the outside bar if you want to be pedantic. Then look what's happened. It's come back and tested it, and then it's crashed. So it happens all over the place, guys. Look, here's one to the upside. High, low, lower high, lower low. And then the minute this closes above that previous, that penultimate bar, then you get a pullback, then you've got a continuation. And in the reverse direction, low, high, high, low, high, 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 low, lower high, until we can sing the break and close bit there. And look what happens, it comes back and tests it. Now I picked this out of randomly, this whole area to talk about here, but it happens multiple times, guys. So how much simpler can that be? Supply and demand. Think of what is actually happening in the market, and that is what a trend is, or a trend reversal, should I say. Okay, and then this indicator helps us enormously because it gives us the momentum of the move as well. It's just a belt and braces situation. You could just trade these candlestick reversals on their own, and you can, I don't want to make this video too long or complicated, but picking one of these at random, you will be able to see the trend on the swings on H1. And if we we'll put the resistance, so it doesn't go on too long, this video, put the support in there that we need to break through, and we will see the trend on the H1. Hopefully, he says. There's the trend. There. Low, high, higher, low, higher, high, higher, low, higher, high. And then the reversal. High, low, lower, high, lower, low. Pull back that candle there. Continuation. It's not a very tidy one, but that's how the trend, and that's how you can clearly see old demand becomes new supply, and it will always be a sideways move unless you've got massive volatility in the market for whatever reason. The London Open is around about here, and you can still see you even had a test and situation here where they were fighting with the supply and demand situation, and then price went down. So I hope this has simplified what a trend reversal is, guys, and I hope this has been a worthwhile video. Thank you for watching. Have a great Sunday.